I know that 90% of your losing trades were not your fault, nor were they because of your strategy or even just bad luck. Let me take you back a bit and look at the scene with me more closely. Look at the chart in front of you. The price calmly dropped, hit your stop loss, and then immediately shot up, forming strong green candles. It's as if the market was just waiting for you just to kick you out of the market or out of the trade. This is true. I'm sure it's happened to you once, 10 times, 100, or even 1,000 times. You call what happened to you, the market betrayed me. But in the real world of trading, a lot of people call it something completely different. They call it liquidity gathering or liquidity accumulation. Let me be completely honest with you, and forgive me if this honesty stings a little, but hopefully it will benefit you. As far as the market maker is concerned, you are not a trader. Yes, you are just bait. Not because you lack knowledge or because you haven't studied or because you didn't work hard in your lessons. No, it's simply because the system you are working in is fundamentally designed to profit from your losses. Whales and banks can't move the market with millions unless there's someone selling to them. And unfortunately, to that extent, the one who's selling to you is someone just like you. You're always chasing after green candles, chasing after red candles. And as long as you keep your eyes closed, you'll keep buying at the top and selling at the bottom. And you'll keep handing your money to the big players on a silver platter. So, what's the solution we need to reach? But let me stop you here. The problem isn't with the market itself, nor with you personally. The problem is that you're working in the wrong way, doing something where no one taught you the real rules. You learned that when the price hits support, you buy, and when it breaks support, you sell. When you see a pattern, you jump in. But what no one told you is that these rules, they've become exposed to the market maker, overused and monitored by the market maker. He knows them perfectly well. He knows exactly where you want to buy. He knows exactly where you want to place your stop loss, and he waits for you and leaves you there. You do all of that, and then what happens? He takes you out from below the support with a single candle. In an instant, there are millions of dollars from your stop losses and others. They're going to get hit because of the market maker. And that's the liquidity, because the whale can't buy a huge amount unless someone is selling to him, so he has to push the price down, hit your stop losses, take the liquidity, and then shoot the market back up. And here you end up losing, and here you start cursing the market. And he comes out winning, and the difference between you and him isn't intelligence at all, it's vision. That's the real difference between you and him. He comes for the liquidity while you come for the lines. Do you see how big the gap is? So is there a solution? How can we get the whale's eye? How can we trade like him instead of always going against him? I'll give you the secret in this video. The secret is in 2 words, accumulation zones, or what we call the order block. Look at the green areas in the picture and the words written on them. These are the zones and places where the whale enters with a massive amount in a very big way. And keep in mind, when he enters, he leaves a bit of a trace. Yes, exactly. So today, we're going to reveal where that trace is. For example, sir, take a specific candle. An unusual movement, a different behavior, these areas become like a magnet. The price has to return to that spot. Why? Not because it likes it, but because there are pending orders below. If it's a buy, there are still orders that haven't been filled or completed. And classical analysis tells you that if the price breaks the support, you should sell. But the perspective we're going to learn today says that when the price breaks the support, it's to grab liquidity, exactly, and when it reaches the broker's order area, that's when you buy. And with confidence, we don't try to predict the movement, we follow the trail. We see where the whale puts his money, and then we place our orders alongside him. My friend, focus with me. Trading is not gambling, not guessing, and not making predictions. It's a science, and I want a promise from you. Before we start the practical section, from now on, before you hit buy or sell, ask yourself just one question. Where am I in this story? Am I the hunter or am I the bait? If you can't see the liquidity, then most likely you are the liquidity. And I don't want you to be that liquidity because today is different. This video will change your perspective. See the market through the eyes of the whale. And you'll see the numbers in your account and the green color, just like the zones we're about to understand in a bit. So come with me to the practical section, my friend. First, we need to know the most important rule, which is support and resistance. We always buy from the bottoms, from the highest or the best points, a support zone, and we sell from the resistance zone. Okay? So what are the reasons that sometimes this doesn't work? And what are the reasons that the market maker is the one playing with our emotions and feelings, making us act in the wrong place? Regardless of the fact that this rule is clear, understandable, and successful at the same time, the market maker knows why you're thinking and what you're thinking about. So we need to understand his mentality and know how he operates. Of course, this video is completely different from the one where I talked to you about market making. Today, we're talking about support and resistance, how we can improve and actually take trades from these levels without any fear, knowing that the market maker is involved. Knowing what he's thinking, this is all something we'll learn, God willing, through this diagram you see in front of you. We'll move together, and I've prepared examples and something tangible right in front of you. What happens daily on the platform is the work of the market maker. He knows that you're entering at the tops and bottoms. But he does something to scare you, something that makes you either not stay or pull out of your trade, like when you see the price move a little. We quickly reverse and think we have to exit the trade, and this is something we face every day. This scenario happens in front of us daily and makes us back out of the trade, or we say, it's okay, we'll just lose $10 if we were trading with a lot size. We lose 20 pips difference, which is better than losing a lot more. As soon as you exit your trade, the market starts moving exactly as you had drawn it out or imagined it in your mind. At the beginning, let's work on the lows, that is, buying at the lowest and cheapest price. We want to buy from here. Let's take this line together and draw it on the low like this. Of course, from this spot, focus with me, from this spot, I want to buy. So I opened a buy position when the market reached down here. Here, it tempted me, scared me, made me play with my emotions. In this situation, I immediately want to withdraw. I want to focus. Honestly, this is important. And this video, I've been preparing it for more than 3 days, just so you know how to trade, how the market makers think, and how we trade. So, in this case, if you're a buyer, they'll create 2 scenarios for you. Look, the first scenario is that they'll make you, if you're the buyer, you exit the trade and say, it hit the stop or it got close to the stop. Maybe my stop is in this spot. Why am I telling you this? I'm telling you, go ahead, move the stop a bit. It's okay because we don't want to go along with him. So in the first scenario, either they make you exit this buy trade, or if you're just waiting and haven't bought yet, they'll make you go down with them. But what they do is tempt you. Once you exit the buy trade, or you act or even just think about it, they play with your feelings and emotions to get you to join them. Before you know it, the trade starts moving like this, and you say, okay, now it's just a correction, I'll just take a quick profit. It moves a little like this, then shoots up. That's how they lure you in. You need to watch out for this temptation. If you don't, you'll miss out, you'll lose your chance. If you enter a buy trade after you've already exited the trade, you've missed your opportunity. And if you enter a sell trade from this point, thinking, I want to follow the whale, no, you need to have indicators to guide you. You have to wait for signals before you enter this trade. Of course, we've talked about this topic in many videos. And the course available below the video in the description or in the playlist is about the fake breakout, the false breakout. We mentioned that there is a real breakout and a false breakout, but sometimes when we enter a trade and the market moves quickly, we forget the knowledge. So it's important to have that knowledge in front of you so you know how to trade safely no matter what people are saying. It's fine, I'm buying. The market is going to go up. I've analyzed it correctly. No matter what news comes out, I've analyzed it correctly. Let's work together based on the concept of resistance. Let's say the price reaches this level, okay? Okay, here we've identified the resistance. We've marked it like this. We drew a line, or we have a resistance like this. What do you think, Shaya? Here, from the highest price it reached, we want to sell to make a profit. Right here, as soon as you saw this strong upward movement. Of course, regardless, there are some corrections here, no doubt about it. But if you delayed selling from here, there are some very important things you need to pay attention to. Here, you get a candle. Let me draw it in the right colors so it's clearer for you. You get a candle like this with a long wick. Wow. And then here you also get another candle. Let's make it red so it looks like this. At this point, you can't tell anymore whether it's correcting or not, and then another candle comes and makes this kind of move. No, here I have a break of the zone. Hold on a bit, because when it went up, it became a wick. This isn't really a candle here. The first time it goes up with a lot of strength, so you think you've missed your chance. No, my friend, you haven't missed it. Don't forget that this is a wick, so this is literally how it's going to look. So, what now? Should I enter a sell or a buy? Should I go with this momentum or this strong upward move? No, when it went up like that, it's the same thing. It's trying to make you exit your sell trade or make you enter with it. What's its goal? Okay, you're analyzing correctly, but I want you to know its goal. Its goal is to get people out of their sell positions. You were in a sell position, and when the market moved like that, people panicked and said, it's just a small loss. Let me get out now and wait for another opportunity. Of course, you just missed out on the biggest opportunity, or the whole world spreads out from here on. Didn't it make those corrections? Those wicks? The market maker's goal with this move is what? To make this move and then drop by itself. It doesn't want anyone to join in. That's how it thinks. We want to outsmart its thinking. Its thinking is that it doesn't want people to enter with it and profit, so it can scoop up everything. All the money in the market, its thinking is to make those who entered with buy positions lose. You need to know how to deal with it. How can you deal with it? I'll explain everything to you. Maybe this video will be a bit long for you, but believe me, you've never heard this information before, guys. Right now, we're looking at gold. Of course, I've prepared and drawn things out so the video can be as concise as possible, because I know the video is going to be long. Look, my friend, we're dealing with exactly what I'm explaining to you here. It was setting traps and working against people. Everyone was actually working the opposite way here. On the contrary, not just here, everything I'm about to show you, everyone is working on it. But I wasn't working the opposite way, and thank God our channel on Telegram, both the public and private channels, are achieving very good results, and there are absolutely no losses. Thank God. Let's explain and talk in detail, just as you can see here exactly. Let's forget about this part for now and go step by step. In this area here, we have resistance. There's resistance here, and then we're at this candle. If you notice, it shot up strongly, but it didn't last. Look what happened. Did you notice? There was an engulfing candle. Exactly. And after that, the market corrected and went back down. The market corrected. And it dropped very sharply after giving me a signal for an upward move here, and the market started to rise. Of course, I've marked it for you here. At the very same time, it also gave me a significantly long wick and this substantial increase. If we open the 5-minute or 15-minute time frame, we'll see that these are consecutive green candles or an upward movement. So people are afraid to buy from here, but as we agreed, its goal is to get people out of their sell positions, make them enter buy positions, and then it drops on its own. Look at how many candles and see how many points it moved. 1, 2, 3, 4, 5 candles, then it made a slight correction and dropped. That means we have how many points? From 1981 down to 1940. A huge difference, a really big difference. Honestly, so after it reached this area, let's keep this as a separate chart on its own. So after it reached this area, we had support here. Now, does gold not respect support and resistance? No, it does respect them, but you need to know how to deal with it. Look, the market maker tries to maneuver with you from every angle based on what you know and what you don't know or what's hidden from you. Why? Because he doesn't want to deal with you in the same way every time. If he did that, you'd figure him out and he wouldn't be able to take advantage of you or make any profit in the first place. So he has to diversify. He has to use all kinds of methods and strategies so that he always keeps things unpredictable. And you say, I don't know how to trade. No, you do know how to trade when you remember what I said and when you know how to apply it, especially during news periods. You shouldn't get nervous and why do we say money management? So you know how to trade. Let's get to the point. I have this pattern now, regardless of whether we took trades here or not. I can, to the best of my ability, give you the clearest thing possible. Here, we have a support zone, just like I told you about those wicks I keep mentioning. At the beginning of the video, when I drew on the paint program, I made a lot of wicks for you here. They're tempting you. You don't know whether to buy or sell. But in the end, look where the wick of the candle dropped. See how far it went below the resistance, and then again it dropped here, way below the resistance. They went up a little, then dropped way below the resistance. He wants to make people lose hope, and the markets didn't improve, so people didn't buy. But in the end, the one who waited for the correction signal and understands price action, and those who fully know Japanese candlestick patterns entered safely. And they got a good trade. Exactly, we took our trades up to here, then it went back down. And after it dropped, it gave me a very nice signal here. And even a beginner knows how to work with it. It gave me 2 doji candles here. These are rare. You'll see that it has interacted with us in every way, not just using one method with us. The difficult method is used with you. The easy method is used with you. It's all about not letting you feel safe, always making you feel like the market maker is the one outsmarting you completely. We're done with all this trading. Now we have a support zone that's even stronger, which is this line here. And we've drawn it here. This is where the real game begins, the bigger play, as you'll see. I'm trying to enlarge the charts so you can see more clearly. After it dropped with a very strong candle below, the support still holds strong. The candle opened lightly here, then dropped with large candles. Maybe this is a 1-minute candle. Here you got really scared, thinking you wouldn't be able to keep up with the downward move. The scenario is that there's a downtrend here. Basically, you could say there's a downtrend in this area. The scenario suggests there's a downtrend here. So wait for the signal and see. After it made this wick and started to rise, you go along with it and you'll be safe. And notice this huge difference. He actually got people out, made people lose, or made people enter into sell positions just so they could say, oh, gold is still going down. It's dropping down to 1800. No, at that time we didn't know how far it would go up. Of course, this was a while ago. Let's come here to this chart. Or this specific spot on the 8th of the 8th month. August 2023, August 2023. Here. We have a very strong resistance here, as you can see. Regardless of the fact that here, you might say, I won't explain all of them to you. I don't want the video to get too long for you, but hopefully this information will benefit you just as you see. You can literally see it went way above the resistance. Additionally, as soon as the candle opened, it opened as a substitute, or rather, in the first 5 minutes, or the first 2 minutes, or even within a quarter of an hour, the candle was rising strongly. So here, you experienced a lot of tension at the same time. It dropped down very strongly, so if you didn't want to take a trade from this spot, you could take one from the next candle. Why? Because I secured momentum in it, and its drop was strong. Its purpose is to make it so you can't trade in the same way here as you did before. It's a trick. Now, if you fall for the trick and get deceived, you end up losing hope. So here, where is my resistance? It was moving almost sideways. And we always do. A sideways market is more confusing than a trending market, whether it's going up or down. Most people, if the market is moving sideways without many clear signals, won't even know how to read it, just like you. You see, it dropped very sharply, and as soon as the candle opened, it dropped again. If you draw it like this and look back at the market, no. Here I have a zone. There are people who know what this is. They say this is an electricity zone or an empty area that's scary. Don't be afraid. If knowledge brings you here and you understand, you need to truly understand, not just memorize. Memorizing without applying is useless. It's empty. No, I want to understand and know how to deal with it because its only goal is to tempt you. As I told you, it deals with you in every possible way. So, as you can see, after it dropped, something happened. There was a slight rise here and then a sudden jump up here. The exact same pattern has unfolded once again. After the asset remained largely absent from any significant trading activity for approximately a full day, the price suddenly shot up with incredible strength. However, I began to notice several technical signs suggesting that it was preparing to drop, and indeed, it subsequently experienced a very sharp and aggressive decline that continued all the way down to this specific point. Let's work on one last example before the market closes. Today is Sunday the 17th and the date is the 13th of September. Let's see how the market was behaving with us on this date, folks. We'll go with you from here. There was something here. It was almost a downtrend, then it started moving sideways and formed a new peak, or rather, it formed a resistance after being in a downtrend, correcting, and dropping again. So if you see this, even without me explaining it, it will be clear to you, especially when you have the right tools. Technical analysis is simple if you understand it, if you grasp price action and Japanese candlesticks. Believe me, you'll achieve really good results. Just apply it here as you wish. You'll notice that on this particular date, people were really confused, and a lot of people started selling from here. But the reason for the selling was that there was news at that time, yet the price respected the 1904 level. At the same time, it dropped but couldn't go lower. The market couldn't fall below 1901. Then it started a strong upward movement until the date when we closed our trade here. And if you like the video, don't forget to support me by subscribing and activating the notification bell so you get all the latest updates. Most importantly, I want to see your comments, and if you have any questions, just leave them for me. If you had any issues with some points, feel free to reach out to me on Instagram. Peace be upon you.